Hello everyone. I hope that you can hear me perfectly well. Thank you for confirmation. All right, let's start. So today we're discussing the UK final GDP and current account. And I'm here to cover the fundamental parts for you, and I hope that Michael is going to join me very soon, because he's going to cover fundamentals afterward, technicals afterwards. I'm sorry. Um, right. As you can see on my screen at the current moment, let's take a look at the current account first. At the current moment, the forecast stands at minus 21.2 billion, while the prior figure stood at minus 17.5 billion. And as concerns the final GDP, the final estimate, the forecast is at 0.5%, unchanged from the prior one. Let's also talk a little bit more about the history of these two indicators and also the projections. And I would love to remind you that the economic growth in Britain has basically so far remained resilient to the headwinds from the overseas, from the foreign countries. The third and the final official estimate of GDP is expected to confirm steady growth of 0.5% in the final quarter of the last year, while the annual GDP figure is still unchanged, also at 1.9%. The final Q4 GDP release is also expected to show that the output in the robust services sector and omnipotent household consumption were the only major segments pushing the economy forward once again. But the persistent negative current account balance continues to be one of the primary risks to the financial stability in Britain, with economists expecting the deficit to have widened notably during the last 3 months of 2015 to 21.2 billion pounds, up from 17.5, as I said already. An elevated level of investors' uncertainty ahead of the June 23rd EU referendum only adds to the concerns, of course, and deteriorating balance of payments is still on the table for Britain anyway. Let's move on. Let's take a look at the experts' opinions. So we have different experts surveyed on the matter, not about the current account, of course. And we have the Bloomberg survey summary based on their views. So according to the experts, the median estimate stands at minus 21.2 billion pounds. Average estimate is minus 20.94. Highest estimate is minus 16.4, and lowest estimate is minus 23.3 billion pounds. While the total number of estimates was very small this time, only 14. But also I would like to mention that in its most recent financial stability report, the Bank of England raised concerns that the financial financing of the UK's current account deficit could be further hit by an increased level of uncertainty ahead of the Brexit vote, of course, leading to lower foreign direct investment. The central bank also warned that increased risks premia on UK assets and further depreciation of the sterling, both partly stemming from Brexit risks, of course, could add to those downside estimates. Also commenting on those risks, Chief Economist Howard Archer, he's the Chief Economist at IHS Global Insights, he gave his estimate also, and he presented his GDP preview, and he said that an appreciable hit of to the business confidence from a Brexit vote is likely due to heightened uncertainty, leading to reduced investment and employment plans. Furthermore, foreign direct investment and portfolio investment flows into the UK would probably take a major hit, which could make financing of the UK large current account deficit much more of a problem and reinforced downward pressure on the sterling coming from the market concerns. Let's take a quick look at the Dukascopy community member sentiments, and according to them, we see that Dukascopy traders are a little bit more bearish on the pound versus the dollar, 52.58% bearish votes versus 47.42% bullish ones. And as I don't have any time left, I would like to pass the floor to Michael, who is going to cover the technicals, as I already mentioned. So, Michael, go ahead.
Thank you, Kate. Hello, everyone. So, for today's tape release, we have the negative surprise trading strategy versus the sell market and the cable currency pair. The sentiment for which is slightly bearish at 52.77%, with the sterling being bought in only 52.59% of all cases, and the US dollar being sold in 41.07% of all cases. Both in the 50 and 100 pip range, the majority of pending orders are to sell the British pound. In the 50 pip range, it's 66.67%, and in the 100 pip range, it's 60.18%. Other market participants are mostly neutral on the cable, with Rand having a 50.26% of a neutral sentiment, with bears slightly outnumbering the bulls. Almost the same for the Saxo group, 50.19%. And the daily FX is slightly bullish at 53%. So we move to the market reaction table. Here we see the reactions for the previous 5 releases of the UK quarterly GDP. The largest reaction was 41 pips, and the smallest one was 17 pips. And we also seen that in the previous quarter the data disappointed. Down from the 0.5 forecast to 0.4, so there is a chance that we will see another disappointment today. And we also have the current account data, which actually beat expectations for the previous 2 quarters. The reaction was 23 and 18 pips during the previous 2 quarters, so it is likely to also have some impact, and the approximate average reaction today is around 30 pips. So based on it, we can set the take profit and stop loss levels accordingly with the oh my god, my bad, we have the take profit and stop loss levels mixed up. Should be vice versa. Yeah, so the stop loss level is located at 1.44 major level, which is right on top of the daily pivot point, so bolstering this resistance area, while the take profit level is located at the 1.4340 level, right on top of the daily S1. What we also have here is a bluish trend line, which kept the pair appreciating through since the beginning of the week, and recently just at the beginning of the hour we had a really good confirmation of this given trend line with a rather strong rebound towards today's high of 1.4380. So this trend line is also unlikely to be breached in case the bearish reaction is if it breaches the take profit level, so the trend line is expected to hold. And finally, the technical indicators, which are giving us mostly bearish signals, with the most important one being the 30-minute time frame indicator, because it was updated specifically for the given data released 30 minutes ago, and it's supporting the bearish outlook for the cable, so meaning that the data will most likely disappoint. Other market participants expect the GDP to meet expectations, while the current account is largely expected to be worse than the forecasts, with the group expecting minus 23.3, which is the top forecaster. But I am already seeing a bullish reaction, well, actually close to no reaction, but nonetheless a few pips to the upside. So I'm guessing we're going to have mixed data. The current reaction is only 12 pips, so rather disappointing. Yeah, we already see the data. The quarter-on-quarter GDP is actually better than anticipated, 0.6% up from 0.5. The year-on-year, however, did disappoint. It remained unchanged, down from the 2.1% forecast, and the current account balance is actually a lot worse than expected, minus 32.7 billion. So I believe that is all from my side. We have mixed data, but still the GDP outweighed the current account data, hence we see a small reaction to the upside. And that will be all, and back to you, Kate.
Thanks a lot, Michael. Yeah, guys, you can see the data, mixed data in the chat. You can see the reaction, and basically from our side, that would be it for this particular data release. Today we're not having any, as far as I know. That's why see you tomorrow at the webinar and another data release. Thank you very much for being with us, and bye for now.